The closing bell has just sounded on Wall Street, and we're wrapping up a session defined by a powerful bond rally, a rebound in big tech and payments, and some clear winners and losers in the AI narrative. I'm Grant Mercer, and this is Storm Stock Solutions, here to bring some clarity through the chaos of today's market action. Let's start with the big driver behind the tape, the Fed's latest rate cut and the response in bonds. According to reporting from MarketWatch, Treasuries continued to rally following Wednesday's quarter-point cut, pushing yields lower across the curve. That's been a tailwind for growth stocks and high-quality, return-sensitive names. But the same piece flags a very important risk going forward. Some managers are already warning that this move could look reckless by January if inflation reaccelerates or the data surprise to the upside. So even as today felt like a relief rally in bonds, the market is quietly repricing the path of policy into early next year. And that's going to hang over every macro data point from here. That rate backdrop helped shape the winners list. Visa was one of the standout stories in the Dow, on track for its best day in about 8 months. MarketWatch highlights Bank of America calling it a great business on sale, and the rate cut helps the narrative that some high-quality financials and payments plays had been left behind. Lower yields can support valuation multiples and ease concerns about consumer credit pressure at the margin. So today's move in Visa is a clean read on how investors are leaning back into durable cash flow stories as the Fed pivots. In big tech and AI, Meta drew fresh attention. A MarketWatch piece on a new Morgan Stanley note argues that concerns over Meta's AI spending are overblown, framing the stock as an overlooked AI winner and talking up potential upside if the strategy plays out. The key point isn't the headline price target, it's the shift in tone. With the stock having pulled back, you're seeing major institutions reinforce the idea that Meta is a core player in the AI infrastructure and application stack. Traders will be watching tomorrow to see if that buy the dip narrative gains following through or if the enthusiasm fades once the upgrade headlines cool. We also saw AI make headlines on the pure play side. MarketWatch reports that OpenAI has rolled out a new version of ChatGPT based on GPT 5.2, an answer to Google's step-up push with Gemini. That arms race between OpenAI and Google is central for sentiment around the broader AI ecosystem. Software, cloud, and chip names all trade off expectations for how quickly these models improve and how widely they're adopted. Today's news reinforces that we're still early in a very competitive cycle, and investors will be sorting through which platforms actually monetize this innovation over time. On the downside, Rivian was a clear pressure point. As MarketWatch notes, the EV maker held its first Autonomy and AI Day, trying to showcase its future in self-driving and intelligent vehicles. But the stock dropped, a sign that Wall Street isn't buying the story, at least not yet. In this environment, simply adding AI to the narrative isn't enough. The street wants a credible path to scale, profitability, and technological edge. Ease and early-stage autonomy names remain areas to handle with care, especially when expectations are elevated around splashy investor events. Stepping back to macro and policy, beyond the Fed and bonds, there was a drumbeat of longer and term policy stories. According to MarketWatch, there's an escalating debate over Social Security operations. Senators are pushing back against plans to slash in-person field office visits and push more people online by 2026. Separately, a trio of healthcare-focused pieces highlight growing stress around the Affordable Care Act and U.S. healthcare costs more broadly. One story points to failed Senate votes on ACA stopgap plans, raising the risk of higher premiums as subsidies expire. Another warns that Obamacare premiums could be even more painful in 2027 than 2026 and then 2026 as consumers flee higher costs. And a separate article flags the vulnerability of U.S. medicine supplies due to reliance on China and India. Those aren't one-day trading catalysts, but they are important background currents. Longer-term pressures that could shape sentiment around insurers, hospital operators, pharma supply chains, and broader consumer spending, as households wrestle with wise healthcare and retirement systems. So as a watch list for tomorrow, a few themes stand out. First, the bond market. Do treasuries extend this rally and keep yields drifting lower? Or do we start to see second thoughts about whether the Fed cut too aggressively? That's going to matter for everything from banks and payments to big tech valuations. Second, AI leadership. Traders will be watching Meta, the mega-cap platforms tied into OpenAI and Google's ecosystems, and the chip and cloud providers that sit behind GPT 5.2 and Gemini. Are we seeing a fresh leg of AI enthusiasm, or just a headline-driven pop third? The skeptics list, Rivian, and other story-heavy, cash-burning names. Today was a reminder that this market is willing to punish big promises without near-term proof. And finally, those healthcare and entitlement stories are names I'm keeping in the background. Insurers, managed care, and any company exposed to ASIA dynamics. As the policy conversation inches closer to 2027, we'll dig deeper into how Future 7 and global markets are digesting all of this in tomorrow's Pre-Open segment, and we'll see whether tonight's bond move sets the tone for another risk-on or a more cautious Friday. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.